QuickBooks Pro Desktop 2021. Tax line mapping. Export data from QuickBooks directly to tax software. The tax software we'll be practicing with being Lacerte. Lacerte owned by Intuit. Intuit being the owner of QuickBooks as well. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are on the desktop. We have the QuickBooks program on the left, the tax software on the right. Tax software being Lacerte Tax Program. Lacerte is a software owned by Intuit, which is also the owner of QuickBooks. In prior presentations, we put data into the QuickBooks system, setting up accounts and account balances, focusing in on the mapping section when we set up the accounts, because that's what will be used to map over that information to the Lacerte program. We're now going to open up the QuickBooks file and export directly from QuickBooks to the Lacerte program, which should save us some data input time. And then in future presentations, we'll analyze what kind of added work might need to be done within the tax software to basically complete the return or look at some more kind of complex type of situations within it. So typically the process here, if we open up the Lacerte program, this is our tax program. I have the company file open. So the company file, I just basically set up a S corporation type of file where it has nothing in it at this point in time. We're going to be then importing using the trial balance function here to the right. Now the way to do that is we could import a QuickBooks file or an Excel file. We typically want to be importing directly from QuickBooks because that's the item that has that tax mapping feature. So we want to be able to have the data set up in QuickBooks as best as possible so that we can then import directly from QuickBooks. That means that if you need to do any adjusting items, so here's like an Excel worksheet. If, for example, we had some adjustments that we needed to do to the book value, then I would go ahead and do those adjustments. If you do them external to QuickBooks, then add them to QuickBooks so that your book balance is correct in QuickBooks. And then take that information, export it to the software so that you can only then have to be concerned with those tax line adjustments, things like M1 adjustments and Schedule K adjustments that we will be taking a look at. That, I think, is the easiest way to do it, although you can do some adjustments in the tax software as well. I just think it would be better to do any book adjustments outside of the software and then upload them into the software. We will take a look at one adjustment, though, that will be a book adjustment, so you can see how that would work as well. So then we're going to then open up the QuickBooks file. So here's the QuickBooks file. We will provide a backup file so that if you want to just restore the data and then use it to import instead of creating it as we did in prior presentations, you can do so there. So the data we have, if I go to the reports dropdown, go to the accounting and taxes, we have our trial balance. We're going to be running this for 2019 because that's the tax software that I currently have. So 01/01/19 to 12/31/19, there is our data, there is our trial balance. We want to export this to the tax software, and then the tax software will import it to the tax return. So typically to do this, you actually want to have the file open. Oftentimes you can have it closed, but QuickBooks will still open the file when you export it to Lacerte, and you want to know where your data file is. So in other words, my data file is right here. This is the actual QuickBooks file that is being opened. It's this QBW file right there. If you don't know where the data file is, you can basically close the program, hover over the link in like the intro page to Intuit, and then find where the QuickBooks file is, because you're going to need to get it and link to it when you go to Lacerte. So then we're going to go to Lacerte or the tax software. Other tax software may have the same kind of options to do it, but we're going to be working in Lacerte. I'm then going to go into the company that we will be dealing with. I'm going to take a look at the trial balance tab. Here is the trial balance tab. It already has something in it, but I'm just going to overwrite it. And so if it didn't have anything in here, it would just be a blank yellow page. I'm basically going to override this. You can see what will populate here is basically the trial balance, then book adjustments, tax trial balance, similar to a worksheet that you might do for an adjusting worksheet that would look something like this, say in like Excel. So I'm going to go back on over. Now to import this, we're just going to go to the imports dropdown. You have this option, the Excel or the QuickBooks. Now, again, you might be tempted to say, well, I would like to export it to Excel, make any adjustments I want to do, and then import it. Can't really do that, however, because you'll lose the tax mapping line, which is the whole point of having it mapped out. That's why I would make any adjustments in any format you would like to. If in Excel, that's fine, but then import them into QuickBooks so that your QuickBooks trial balance lines up to your adjusted trial balance, then export it from QuickBooks to the tax software. Therefore, only having to do at that point the tax adjustments, K1 adjustments, M1 adjustments, for example. So I'm going to go to the From QuickBooks item here, and then we're going to locate the QuickBooks. This is why it's important to know where the QuickBooks file is. This is the one we're looking for. So it is the QBW file. I actually have it open. If you do not have it open in QuickBooks, then it will open up QuickBooks in order to give you access from one program to the other, to take the data to Lacert from QuickBooks. So I'm going to double click on that. That's the one we want. I want the 1120S. It should pick up the right one because that's the tax return we are actually in. But if it's farm income or rental income or other rental activities, you can choose these items. We want just the 1120S. So I'm going to say OK. It'll think for a little bit. It takes a little bit of time for it to link up here. Now, if it takes a long time, click on the QuickBooks file down below, and it may have this pop-up that didn't like jump over to that page. So you should get a pop-up here within QuickBooks, and QuickBooks is now saying an application is requesting access to follow the QuickBooks company, and so it's saying, do you want to give permission? In essence, I'm paraphrasing. QuickBooks is saying, hey, do you want to give us permission to let like Lacert, import the data? So we have these options down below. Do you want to allow this application to read and modify? Either no, I'm going to say yes, but I want you to prompt me each time rather than you can choose these other options if you so choose whenever this QuickBooks company is open or always. I like to have the prompt here because if we adjust QuickBooks, I don't want it just automatically adjusting Lacert. I want to make sure QuickBooks is right and then import it when at a specific point in time. So I'm just going to say yes on this one, but prompt me whenever you make any changes. And then I'm going to say continue. And you have chosen to grant application. Yes, we have. Done. Then we have calendar year 2019. That's the one we want. We want to import. Generally, you want the accrual basis. That's going to be the default basis within the QuickBooks system. So I'm going to say OK. It goes back to thinking. And then it imports the information here. So there we have it. So that looks pretty good. If I take a look at the net income down here, we're at then the 367.5. Let's just kind of check that and run an income statement on QuickBooks. Reports drop down, company and financial. Take a look at the profit and loss for the year of 01/01/19 to 12/31/19. And I messed up the date, 12/31/19. And then we're at the bottom line is 100,000 here, and here we have this 367. So something looks a little funny here. Let's check it out. So I actually just ran it a second time to import it again, and then it went through the same process, and then it's going to import, and it gives me this little window that tells me the items that have been imported. So this is 30 accounts mapped from QuickBooks Mapping, 6 accounts remain unmapped. So and again, all I did was go to the import and then import again, and I didn't have to go through the same linking process or authorization. It just basically gave me that warning saying, hey, we're going to input this data. So I'm going to say there's the 30 items. That looks good. I'm going to say okay. And then we'll check it out again. So now it looks like it has been adjusted. So that looks good. Our total then down below is now 100,000. That ties out then to what is on the profit and loss. So that looks good. So it looks like the net income is tying out. So we have this information in place now. So now what we want to think about when we import it to the tax software is going to be this tax line mapping. So the tax line mapping on the right, you can see the items that are not red have been mapped out. So if I was to say, click on this item, for example, it's going to tell me where it is going on the tax return. So this is going to interest income on the tax return. This is a Schedule K line item. So that was one of those kind of a tricky ones. Now the telephone's not being mapped anywhere, so we'll have to go in and basically map that out. So these are the ones that we're going to have to, adjust. And so this is the mapping of it. And then on the trial balance here, we do have the adjustments, so we can make like book adjustments if we needed to, like make an adjustment to make the accounting books correct. But again, typically I would do that outside of the tax software, but you have the ability to do that in here if necessary. And then we have the tax adjustments that we can make on the right, which I would still make in the system. But these tax adjustments can be a little bit tricky because some of the tax adjustments, are the M1 adjustments and Schedule K adjustments, and they're not going to give us a little reconciliation over here when they make those adjustments because they're doing it from the tax line mapping. So I would still then make some kind of other reconciliation worksheet, which I would do in Excel to kind of show myself, if I have to go back to it in a future period, what the adjustments are. What's the reconciliation between this 100,000 and what's going to be on the tax return, which may differ for tax net income. And so I would say you'd still have to basically track it to some degree, and we'll take a look at a couple examples of that afterwards. So then we have the journal entries that we have here, and then the tax line items. So again, we're going to have to go back in and kind of adjust these tax line items that are in red, and then just verify those. Once that is done, then you can post it to the return down here. So we'll post it to the return now, and then we'll go make adjustments. There's nothing currently in the return. If I was then to post it, let's see what it does. It says 29 accounts posted, 29 items posted, 4 accounts remain unassigned. So they have these accounts that are unassigned. We're going to have to go back in and fix. So I'm going to say, okay, that's good. Let's check out the tax return. So if I then go into the tax return, you can see it's populated here. We have the information that's populated on the income statement. This has all been populated just from that data input. Now note that the ordinary business income down below is 112,500, doesn't tie out to what was in QuickBooks, and that could be correct, but I don't know exactly what that reconciliation adjustment is, and so we still need to do some work to kind of back into that reconciliation adjustment, which can be a little tricky the more complex the return will be. So then we have the Schedule K. Notice it did pull over on the Schedule K, the interest income and the dividends, which are part of the adjustments, most likely, that we would have for the reconciliation. This is basically a reconciliation kind of worksheet that we have here. And we set these up, we mapped these to go to the Schedule K kind of adjustment. So that's nice. That worked out the way we thought. And the charitable contributions, another reconciling item, also mapped over here as we would have expected it to do. So that looks good. And then we're going to go, and so we'll take a look at more detail on this in Excel to see how we can map out this reconciliation. But then we have the non-taxable expenses here, and we have our balance sheet. Now, is the balance sheet in balance? It's not in balance because we didn't add, there's 4 accounts that weren't added, so we're going to have to do some adjustments, including adding those 4 accounts at the least. And then we have our M1 adjustments. It adjusted for entertainment down here. And so that's going to be another kind of reconciling item that we're going to have to think about. Well, what did it exactly do so that we can kind of reconcile it and be able to explain to someone such as an auditor or something if we were audited on it. So that's what we have thus far. So in future presentations, we'll try to do a worksheet. Now, I would think that we'd still want to export it basically to Excel or do some type of process so that you can do the reconciliation. In other words, you could just basically take like this income statement and then write down, well, here's the book income, and then write down the reconciling items. I would write down the reconciling items to show how you get to the tax income. But I would rather do it in a formal way in Excel because if it's a longer return, it'll be easier to do that, and you got kind of this double accounting system that will help you to reconcile and make sure that you don't make a mistake or be less likely to make a mistake with it. So that's what we'll do in future presentations. We'll take a look at the mapping here for that trial balance, map out a couple of those items, take a look at some of those tricky items that were mapped out, including the Schedule K kind of adjustments that got mapped out and that M1 adjustment for the meals. And then we'll see if we can kind of reconcile that to what would happen using Excel.